You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average, which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? You know, if traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue. But all of our indicators are saying this is capitulation right now.
Wow, wow, wow. Is this actually capitulation? I mean, have we shaken out all the weak hands and the leverage? Or is this just a dead cat bounce? Because Bitcoin is now jumping again to 42,000. On today's show, I'm going to show you the data that shows whether the market crash was manipulated. And let me tell you, this data is super, super, super juicy. We're also going to look at whether it's safe to get in. And if it is safe to get in, I've made a shopping list. I'm going to show you my shopping list with prices attached to it. So you want to stay tuned till the end. Also, we're going to bring in Sheldon for an emergency announcement, because what he said earlier on in the show, it's actually happening. And we need to understand exactly what we need to do from here. So big, big, big show, guys. Stay tuned until the very end. Holy moly, what the hell is going on out there? I mean, exactly as Sheldon predicted, the prices are going up again. Is it like a dead cat bounce? Is it sucking us in, sucking in the hopium? Or is this actually part of the market recovery? That's basically what we're going to be talking about the whole show today. So, I'm Crypto Man Run. We're back. If you're new to our channel, welcome. You should have been here in the entire bull market. Hopefully you joined us only in the bear market. Had you joined us in the bull market, you would have been ready to retire today. No, just kidding. Maybe you would have won the banter bags. So, if you're not a subscriber to our channel, subscribe now. Become one of the 278,000. Oh, I see you guys subscribing. Calm down, everybody calm down. So you would be one of the 278,811 subscribers to our channel, and the one of 278,811 people who are eligible to win the banter bags. So we have started a new banter bags. What are the banter bags, you ask? Well, we want our community to have life-changing money. So the first thing we do is we never charge our community for anything. We just don't charge. Everything we do on this community is absolutely, absolutely free, including Sniper School. We're also giving the banter bags to our community. And that's when we took $10,000. We invested the $10,000 into pre-market allocations. Those pre-market allocations totaled about $700,000. And we gave that away to 10 members of our community. And we started the banter bags all over again. And the first investment I made in the banter bags was I put $1,000 into this baby over here, which wasn't affected by the dump yesterday, guys. It was started at 70 cents. It's back at 70 cents. So our investment from the banter bags in GERO wallet is worth $140,000. We paid about 0.5%. So it's worth about $140,000. That is the first token in the banter bags. There are going to be about 50 tokens in the banter bags. Maybe they won't all do this well, but I can guarantee that the new banter bags are going to be way bigger than the old banter bags. And the competition is now launched again. What do you need to do to win the banter bags? Simple. Subscribe to our channel. Follow me on Twitter. Follow Sheldon on Twitter. Like, comment, share, and we're going to start selecting the winners. We'll let you know exactly when we're selecting the winners. We may even select some winners today. So if you're here and you're not a subscriber, you can't win. So make some noise, like. In fact, speaking of likes, let's look at the likes, because the likes is what gets other people to watch this channel. And we want you guys to help us. We want to grow this community so we can keep bringing you all these free things. Let's look at the likes, because the likes is what gets other people. 10,000 of you watching, 5,200 likes. Guys, that's not on. Let's do this. Okay. So today on the show, we have Sheldon giving us an update of his trade. Also, I don't know if you guys remember this video, or I don't know if you guys even saw this video, but about a month ago, April 23rd, there was a gentleman who called this market correction. Let's listen to what he said.
You know, it's hard to call it a bubble, but at the same time, I do think you have a situation where you're going to look for significant downside here. And this is actually the wrong chart. Let me bring up the right chart on this. But basically, you have a scenario here where Bitcoin is looking to potentially have a collapse below 53,000. All right, so you're looking at a collapse below 53,000 on Bitcoin, and that actually could take it down as low as 20 to 25,000 according to my charting.
Okay, so later in that interview, he called Bitcoin to about $30,000. And I remember when I listened to that interview on April 23rd, I was like, who is this guy? He has been on our show before. His name is Gareth Soloway. He's actually a big gold bull. And he said Bitcoin was going to go down. Now, remember, Bitcoin was at $53,000 at the time. And I looked at this and I said, there's absolutely no way this is happening. The guy's been smoking his socks. He was right. And today we're going to get him on the show. So massive, massive, massive show today. I see a message here from Fred. Fred says, Cardstarter also didn't move. It wasn't only GERO. Did Cardstarter move? Cardstarter, $78. I mean, this thing is bulletproof. It's the biggest launchpad now, the most valuable launchpad in the world. It's bulletproof. It doesn't actually move. You know what it does show? It shows the conviction, and there's a big word there, conviction that the Cardano holders have. They got diamond hands. The Cardano holders have seriously got diamond hands. Cool. Let's get on with the big show today. And I guess what we have to be talking about today is we have to be talking about what is going on the Bitcoin price. So I want to say to you guys, if you are here and you never sold everything yesterday, you didn't capitulate yesterday, congratulations. Because you survived the biggest market correction since 2013. Yeah, you just by holding. And I kept saying to you guys yesterday on Twitter, and I told you guys on the show yesterday, do not sell into the red. If you survived the biggest market correction since 2013. Look, there have been other corrections, and they have been brutal. But I can tell you, having been here since the end of 2014, I've never seen anything as bad as I saw yesterday. And that's how I knew it was time to buy. And that's why I was posting my buys on Twitter to show you guys that I think it's safe to buy. Now, we've had a slight recovery, but there's a lot that we can learn from 2017. And I want to take you to the 2017 chart because I think it's super important that we look at history because history tells us a story. I said to you guys that I think that this reminded me, the sentiment, the speed, the velocity of the candles reminded me of 2017. The end of 2017, the end of the bull market. And we're going to talk today about whether this does mean that we're at the end of the bull market or whether this is just a short-term correction. There are lots of views in the market right now. And we've got views from everyone today. That's why I think today is going to be our biggest show. So please, guys, get people onto the stream by liking. And that way we can get more people watching. So let's look at 2017. 2017, Bitcoin collapses. And Bitcoin collapses in December 2017. I think it was 17th of December. That was the all-time high for Bitcoin. Bitcoin then trading at $19,943. And we get this massive wick down it goes down, and we get the massive wick down all the way to 50% off the top, which is very similar to what we experienced today. Then we have a bounce. The bounce takes us back up 60%. So get the numbers here. The numbers here are 20,000, all the way down to 10,000, all the way back up to 17,000, 70% retrace, and then all the way down again. Now, the difference between 2017 and 2021 is that in 2017, crypto was very speculative. There had been no crypto disruption. Bitcoin hadn't disrupted gold. Ethereum was just a concept. It wasn't being used for anything. There wasn't $100 billion locked in DeFi. The question is whether this time will be different. And that is what we're going to be talking about today. So I think to kick it off, let's get Sheldon onto the stream because I guess we need to look at the charts against the charts. Right, Sheldino?
How's that, buddy? Of course.
Okay. So before we start, I want you to take me to 2017, and I want to see if 2017 actually mirrors today, 2021.
Well, there's basically the 2017 highs. So if we have a look, I basically took the two charts between obviously Ethereum and Bitcoin to have a look what was actually happening. And we could see the whole different change that firstly, we know that not everything runs together. We can see that clearly. From the 2017, that was Bitcoin's highest point in the run. And Ethereum was nowhere near it just yet. And we could then see once after we had a big dump in the market, a big correction where Bitcoin went from 90 or 20,000 all the way down to 11,000. Yeah, basically close to 10,000. Then all of a sudden we had the trigger from Ethereum then to start to get its all-time high. So we can see between the two coins, especially between the alts and Bitcoin, to see how they actually started running in these cycles. So understanding that and understanding this big correction that happened, it means something in the market is going to shift. And something is going to be different than what it was for the last few months. And this is just a nice key thing for us to see and to see how these coins run together. And it makes sense that they can't just all go massively together. So it's a nice way to see how the transition happens. How does the transition happen? Through something drastic in the market. You know, that was a 45% drop. Yesterday it dropped a little bit bigger, but that was a 45% drop. And after that, what was triggered?
The next bull market meeting. That's exactly what I want to show the guys today. One big correction ushers in a new season. There was a massive correction here on Bitcoin, and that brought in the Ethereum season. So if you look at the dates, from about the 20th of December till the 10th of Jan, Bitcoin was on a downtrend, Ethereum was on an uptrend. And it's only in February that both markets crashed, and that kind of represented the end of the bull market. Now,
exactly.
Take me back to the Bitcoin chart of today.
Cool. So here we go. So I think if you don't mind me giving a quick update, right? And then we can go into the bigger view. Is that fine? Cool. So remember what we said this morning, that we're expecting. Firstly, I hope you guys have realized that through these dumps, there's a reason why yesterday I said I shut my laptop off and I'll deal with it tomorrow. Because if we go have a look here, just look at this. Look at this day. It's absolutely insane. This is why we need to be very careful about when you're selling on these huge dips. There's always going to be a retracement to a move, if it's upwards or downward side, and then we can make the decision, okay, should we now bank some of this profit? But you see what happens if you panic sold and you sold close to the 30,000, or you panicked out. The next day, now you'll be absolutely hating yourself and you'll be very angry. So it's a very much of an emotional game where we're sitting. So what basically counted from this morning, we said we're going to have that pull up. And we are getting to that stage now where I did also put on Instagram. Please follow there, because we are giving little hints there just to help you guys with this as well with videos. But between 42 and 44,000, this now is where my farming stage comes. So what happens? We lost 30% in Bitcoin. Okay, cool. Now I have the chance where the market is going to be choppy in a sideways market to accumulate coins, which will naturally bring my entry price all the way down. So where we're getting at now is, firstly, we have not reversed anything just yet, short time frame, which means our opportunity to make Bitcoin is active. And what I've done for us is I've set us a nice bottom trend line, which is tracking support. And I still have the same zone between 42,000 and 44,000. Now, do me a favor, guys. Whatever sort of trader and your experience, this is what matters. If you're a brand new trader and you're learning how to trade and you're watching these shows and you want to try, do me a favor and take 5% of your portfolio and trade a shit ton of it every day with what we call. Once you get comfortable with trading 5%, you'll make money with 100%. Please stop making the mistake of learning how to trade with all your money. That's one big rule I just want to bring up today. Secondly, for the guys that are more experienced traders and that we're running now, I'm looking to use 50% of my Bitcoin now to make more Bitcoin. Exactly. Exactly. Now, what we're looking at here is, firstly, price moved way too quick yesterday. Went way too fast, and we know how it works, where price can slowly come back down to those zones. So this farming strategy, what we're running with, and we'll have an update on tomorrow's show, is I'm taking profits between $42,000 and $44,000 in that zone, and I'm buying back between $34,000 and $37,000 is where I'm buying back. Now, if we have a look anywhere in these zones to that, will give us at least a 15 to a 20% increase in our Bitcoin from this move. And then after that, I see us then making our way up to that $48,000 region. So what we do have is we have a nice trend line in play for us to know when we're losing steam, We are starting to get to that zone. We can already see how we're getting rejected. Here's all the resistance points fighting us over here. And what's nice about this strategy and why I'm willing to take 50% of my Bitcoin risk is if Bitcoin decides all of a sudden to become bullish and it just starts to send this candle, we have all of this previous resistance, which always becomes support, which means wherever I get out at this zone, if we do make the bullish move, I just buy back the same amount of Bitcoin. At least I know it's a confirmation buy and we are going up. But this is the rejection zone that can take us down to this level, and this can farm. So remember what I said now earlier, that we have Bitcoin dominance trailing down, but we have broken trend, short-term, higher time frame, which means that everything is going to do what Bitcoin is doing. Sorry, guys. So everything is going to do what Bitcoin is doing. So that means that I don't need to go chart all of these altcoins. I'm going to run my altcoins with my Bitcoin, meaning that if Bitcoin is getting to 42 to 44 in that level and I'm selling off in Bitcoin, it means I'm starting to sell off on some of my alts. And when Bitcoin gets to 36,000, 35,000, I'm buying back my alts and buying back Bitcoin. So it doesn't matter what the coin is. I'm trading Bitcoin cleanly, only Bitcoin, because the market is following Bitcoin, which means I don't have to go chart all other coins. It's just when I'm buying Bitcoin, I'm buying alts. When I'm selling Bitcoin, I'm selling alts. And that's a nice little strategy for us to use. So this, it's all working great to plan.
Take me to the Bitcoin dominance, because the dominance here tells the big story. Because we had the reversal of a dominance. The reason why I'm saying that is because, yeah, just going to the shorter time frames, and you can see we've also had a reversal of the dominance, which means that the sentiment is changing exactly like we said it would change. I still think that the dominance is going to go closer to the resistance before it does a full turn.
Yeah, look what it's doing now. Perfect break, perfect test. So that's a good sign already. But the fact that we already know that since this big dump happened, we had the reverse in dominance, which means now that dominance goes up when Bitcoin goes up. Now we can already see dominance starting to come down. And when that's coming down now, we can see that, I'm lying, sorry. When Bitcoin is coming down, that dominance is going up. Sorry, that's the other way around. Now Bitcoin's going up, dominance is coming down. But now that's already showing us that at this point, if we bounce here and we start to turn up, that's indicating that Bitcoin is going to start pulling back down, because that's the sort of what I call it, the way we're sort of matching it at the moment, the way it's running. That when Bitcoin is coming down, that dominance is going up. So this is the levels we're sitting at now. So we're not just going to reverse from what happened yesterday. It's not just Bitcoin going to go up to 50K now. It's going to play in the zone. Remember what we said about the market cycle and where we're sitting now. This is where Bitcoin does this, guys. This is where Bitcoin does this for a while.
So Sheldon, I think what we need to do is as follows. I think the first thing I want to bring in Gareth Soloway, because he actually called this on the 23rd of April. Then I want to look at the psychology of what happened and what the psychology is now and the fundamentals. And then we're going to look through a shopping list. And then we're going to go through the tokens that we're buying. And I've prepared for you guys, Sheldon and I prepared an amazing shopping list for you guys of what you should be buying and also at what price. And I'm going to just show you how amazing the shopping list is without actually showing you the shopping list, but it looks something like that. Did you see that? It looks something like this. It shows you exactly what to buy. So stay tuned until the end. I'm going to bring in Gareth. Sheldon, stay on the line here with Gareth. Gareth, welcome back, my friend.
Hey, thank you for having me back. It's great to be here.
How's it going, Gareth?
Hey, how's it going?
Good.
Great for you to be here, but I mean, we're here under the worst circumstances, and I mean, you really called us, and I want to play this video again from Kitco News, 23rd of April, and then I want you to show me your crystal ball. Okay, I want you to show me where the ball is.
You know, it's hard to call it a bubble, but at the same time, I do think you have a situation where you're going to look for significant downside here. And this is actually the wrong chart. Let me bring up the right chart on this. But basically, you have a scenario here where Bitcoin is looking to potentially have a collapse below 53,000. All right. So you're looking at a collapse below 53,000 on Bitcoin. And that actually could take it down as low as 20 to 25,000, according to my charting.
Wow. Okay. You were spot on there. I mean, we didn't get to 25,000, but we got pretty close.
Yeah. Yes. So I would just say that, yeah. So one of the things here, so there's a few things that kind of let me into understand this. And to first say, I'm a huge long-term crypto bull. I mean, you know, huge, but I think as a longer-term crypto bull, you have to remember 2017. You have to remember many other periods where cryptocurrencies took a 50% or more haircut, and then eventually they recovered and then went way higher. And that's kind of the position I'm in here, where you had this head and shoulders pattern. You were making lower lows and lower highs. You saw, rumors from China that they were going to start to cut back and ban cryptocurrency. All the things were in the making for this collapse. Plus the just crazy bullish sentiment out there between, with average investors. And, I've always learned, and I traded through the late 90s and the early, 2007 bubbles, is that when things get that crazy where you see Dogecoin doing what it's done, you're usually setting up for some major, correction. You
just never know when the correction's going to be. That's the problem. So, you see Doge at 30 cents, you think, okay, at 40 cents, it's okay, it could go to 50. It nearly went to $1.
Yeah.
And you never know when it is. Gareth, does this remind you of the end of the 2017 bull market, or does this remind you of just one of the pullbacks? And the reason why I say that is, for the first time, I felt yesterday like I felt in February 2018, where the sentiment was like, whoa, it was a big shock to the system. How do you feel? Do you feel like this is there, or do you think this is just one of those 30% corrections that you have on the way up?
Yeah, so I think it's going to be a little bit more than a 30% correction. My guess is the ultimate downside target I have, and this is where I'm going to be buying with both hands, will be right around that 20,000-ish level. What I'll probably do, and this is how I trade, folks, is that, I never assume that I'm going to hit the exact low, so I don't try. What I do is I put small orders out along the way like breadcrumbs, and I accumulate, right? So if I think crypto, if Bitcoin's going to go to 100,000 or 500,000 in 5-10 years from now, what I'll do is I'll say, okay, well, I think my lowest point is 20,000. So I'll start buying a little at 27.5, a little at 25,000, a little at 22.5, and kind of all the way down there. So I do think there is more downside. You hit the head and shoulders target at 30,000-ish just yesterday. Now you're probably going to bounce back to close to 48,000, which would be the neckline of that head and shoulders. And then my guess is you'll have another leg down. I don't think the flush out, it was too quick. People that were caught on the downside, the bounce has been too big. So I don't think you have an absolute bottom in just yet. But again, long-term, if you're a long-term holder, I mean, it's fine to hold it and just kind of not look at the screen, but don't torture yourself by looking and saying, oh my God,
Gareth, are you looking at the charts? I mean, could you share a chart with us? Are you, there's a share screen button at the bottom. Guys, I love what Gareth's saying. If you love what he's saying, give him some love, smash that like button, give him some love, show some appreciation. We are getting you guys the best guests here today.
Yeah.
And the worst thing is, you know what the worst thing about what you're saying is? I have Sheldon, and Sheldon, we call him the sniper because he's so accurate. And I see him in the waiting room as you're talking, and he's just nodding his head going, he's right. He's right. And the whole day I've been saying to Sheldon that he's wrong.
Well, I appreciate Thank you for the vote of confidence. I appreciate that. So let's go over this chart of Bitcoin right here, because this way I can really talk about what I was seeing. So when you were at 65,000 up here, that was, you were making higher highs here. You can see a high, higher high, higher high, but they weren't dramatic like the difference between this high and this high. So that tells you that there's a little bit more distribution going on there, meaning selling from bigger money. Then you had this dip, and here was your previous low, and you made a lower low, a lower high. Here's your high, here's your lower high. And then here's your head and shoulders. Check this out right here. Shoulder, head, and shoulder. And to calculate the target on a head and shoulder, you take the highest point of the head, you drop a plumb line straight down to that neckline, and you take that distance, which was about 15 to 20,000, give or take. And you then, when it breaks the neckline right here, where it opened lower and kind of went down, you take that same 20,000 and you map it down. And that's where you get your 30,000 target for the head and shoulders and where it was going to bounce. In addition, if I can throw my moving averages on here, look at the 200 moving average right there on Bitcoin on my chart. So it went right to where you would expect it to play out. Now you're bouncing, and the thought process here is, see this was support, right? This trend line, this neckline of the head and shoulders. So it hit it, and then it finally broke. My guess is you're going to retrace up to that level, which is now going to be resistance, and that'll kind of be your short-term resistance. So if you're, if you bought yesterday in the 30 to 35 or even 40,000 range, you still could get some nice profits in the short term here. But ultimately, I would start to look to take those profits off the table if you get close to 48,000 to 50,000.
Okay, what if we break that support line, that resistance line? What if we shoot up, break straight through 48, 49, and go back to
Then
50?
you buy it again on support at the same price. But
Yeah,
at least
exactly.
Confirmation buy.
100%. So if you break through here, first of all, you have to be cognizant of the moving averages, right? So you do have these moving averages lurking just above, which will be resistance as well. But just like you're saying is if you get above there and you start to consolidate on this line and don't go back below, and then you'd essentially be making a bull flag and you could look to buy it. Again, be careful of the moving averages. That's a little tricky, but certainly you'd get more bullish in that scenario.
Gareth, what I also saw yesterday was that the gold price went up quite sharply and the Bitcoin price went down. Last time you came on the channel, we had a discussion around whether people were shifting out of gold into Bitcoin. At the time, you said it was a real thing. Did we see people shifting out of Bitcoin back into gold, the weak hands, the spinach hands?
Yes, you absolutely did, and it's an absolute real thing. We've seen gold underperform while Bitcoin was rallying for the last 3 months, 4 months or so, and now you've seen gold really over the last week and a half to 2 weeks starting to really rip to the upside. And I don't necessarily think it's the average investor that's saying, "Oh, let me switch over to gold." I think it's more institutional based, where institutions are starting to get a little nervous based on how high Bitcoin had gotten and the chatter. I also think that, Elon Musk talking about how cryptocurrency or Bitcoin is not super energy, positive, meaning that it takes a lot of energy to mine. I think that kind of is a negative for a lot of publicly traded companies, right? Because if you think about it, everything in this day and age now is how can I be green? How can we become carbon neutral? And Elon Musk talking about that probably made a lot of bigger companies say, all right, let's step back and maybe not buy Bitcoin right now. Now, having said that, I think we all know that there's a lot of renewable energy that's being used to mine. I think it's going to eventually go that way anyways. So I think Bitcoin has a huge, amazing future. But these CEOs of these companies, right? I mean, their public image, they don't want to be hammered by the average investing public for being non-green. So I think that could be a little headwind in the short term as well.
I agree with you. I think that the Elon Musk thing was a killer blow short term for Bitcoin. Yeah. But I think it's actually a good thing in the long. It's a good thing for 2 reasons. The first reason why it's a good thing is because it will make people work on making Bitcoin more green, which is something that Kathy Wood we're going to be speaking about later on in the show. And that's going to make Bitcoin even stronger and more resilient. And that really is the story of Bitcoin. It just becomes stronger and more resilient over time. The second thing is, I think it has done the other blockchains a massive favor. So Ethereum is super energy efficient when it goes to ETH 2.0 and it's not a proof of work coin anymore. Cardano, all the other blockchains. So I think like when institutions look at this, I think they've bought into cryptocurrencies now. I don't think it's just like stay away from me asset class. And now I think they're going to start aping into Ethereum and Cardano. How far are we from institutions actually buying Ethereum? I mean, does it sound crazy?
No. In fact, I love Ether. I mean, it to me is a great coin to hold, and I think it's going to be a monstrous one in the future. And I like what you're saying about it being more energy efficient. And I even think I agree with you that I think you'll see corporations say, okay, listen, we may be putting some Bitcoin on our balance sheet, but we're going to put up solar panels on all the roofs of our buildings to compensate for that energy, being used to do it. And I think CEOs are smart enough to realize that there's a future here in crypto. They just have to figure out how to sell it to the public where they're not looking like they're burning a bunch of coal to get their Bitcoin. So I agree 100%. And Ether looks great to me. It hit a major support yesterday. I still think it could go down a little bit more when Bitcoin dies. But Ether and Bitcoin, I mean, they're just awesome. They're absolutely awesome.
Yeah, I must say, I think that it's not all bad out there. One more question. Now that Bitcoin's retraced 50%, do you think that it's done real damage in terms of institutions looking at it and going, hold on, if we buy this asset, there is a chance we're going to get another 50% retrace because Bitcoin keeps doing that. Gold doesn't retrace 50%. It doesn't retrace 50% very slowly. So do you think that the damage done by the crash itself and the over leverage and everything else that's been happening, you think that was the killer blow?
Yeah, so I don't think so. I don't think that that's going to have a long lasting. I think just like the investing public, corporations in terms of adopting it and so forth, it's a very short-term memory. So initially you get like, oh my goodness, I touched the hot stove, I burned my finger, ouch, let me step away. But then over time you start to say, okay, listen, let's go back to the logic of the situation. What is Bitcoin? What is Ether? How does it protect my assets in terms of dollars? How does it potentially give us exposure to something that's very, very popular and likely the future of this market or this economy? So I think that for the most part, very short term, yes, it's going to make them step away. But you know what? That gives us an opportunity. Don't forget, folks, is that, when you get these dumps, people look at it like, oh, this is horrible. But really, if you look at any asset class or even stocks, I mean, Amazon back in the early 2000s had massive declines, and look at where that stock is today. They're buying opportunities at the right levels if you have a long enough horizon. Absolutely.
So to summarize, what this was an asset class that ran up too quickly. People got overconfident. They took leverage positions. They were weak hands. They thought they could come here and get free money. And yesterday just reversed it and reset it. I mean, is that the best summary that there is today?
That's a fantastic summary. Absolutely. I mean, you see it in so many different things that, the craziness gets too crazy and then it has to dump out and flush out the weak hands. Again, I don't think it's fully over yet. So I do expect it to go into the 20,000, maybe as low as 20,000 range. But again, it's just a reset. What you want to see is essentially what they say is blood in the street, right? So when everyone is hating on it, when everyone is scared of it, when everyone is throwing up their hands, that's when you need to say, okay, now is the time for me to accumulate it. Just like, just a year, 2 years ago, people were acting that same way. They were saying, oh, it will never be anything. Oh, it's nothing. And then in 2017, it was the greatest thing. So there's a swing of emotion. You need, as an investor, to be the logical person that just sits back, understands its usefulness in society, and then looks at the charts and buys off the charts.
That's exactly what we're going to talk about there. Gareth, if our community here is saying they want to follow you, they need to follow this guy, where can they follow you? Where can they see your trades, your calls? Are you on Twitter? What's the best place to follow you?
Yeah, follow me on Twitter at Gareth Soloway. And if you want to come to inthemoneystocks.com, you can check us out there. I don't do a lot of crypto calls. I did put out one yesterday. We bought crypto. We bought Bitcoin at 31,000. I sold it at 41,000 already. But mainly I do stock trades. So it may not be for most of you guys. But again, if you want, follow me on Twitter. I put lots of good crypto analysis up there.
All right, and we have put Gareth's Twitter in the show comments. Gareth, thank you so much, my friend. Well done on a call. Well done on buying yesterday at 31, and keep doing it, my friend.
Hey, thank you so much for having me. Have a wonderful rest of your day.
Great to see you again, my friend. Great to see you. So Gareth was actually on our show when we first launched the station, and we used to get like 500 views in the same month. So what a great guy. All right, so we now know the following. We now know that the reason for this shakeout was actually basically what he said, and that is too many people coming into crypto too quickly, thinking that they could make a whole lot of money, and then actually making money. And the more they made money, the more they thought this place is easy. And they started to bring more and more and more money. And the result is that they got overexposed. I mean, a lot of people quit their day jobs to trade crypto, mortgaged their houses, decided to take out leverage on all the big exchanges. And that is exactly what happened yesterday. And I think Melton Demers, she summarized it pretty well. And I want you guys to listen to this.
Since the start of the year, Bitcoin has trebled in price, starting near at 20, topping at 65. We're now hovering around 40. Ether was a laggard, but in the last few weeks has seen its own trebling, going from around 1,000 to all the way up to 4,500 just a few days ago. So it's been really frothy. There was a lot of leverage in the market. Some of that got taken out in April. Still was a lot of leverage. So this correction we've seen, I think, is healthy. A pullback is normal in crypto. The last piece I'll add is, Karen touched on this, if we look at the macro story, institutional cash is at near record highs, sitting at 3 trillion. It was at 3.2 record high in May of last year. I think right now we're seeing skittishness around risk in general. So allocators are pulling back. We saw this reflected in fund flows last week. We saw 50 million in net outflows from Bitcoin fund products last week. So I think this is skittishness. It's tied to macro. It's tied to overall markets, tax day selling. People just get anxious. And that's what we have here.
That's exactly what happens. Basically, People come in, they overextend themselves. And when I say people, I mean people. I don't mean institutions. Because this is exactly what happened again. It is the short-term holders. It is the retail investor. Look at this chart. This is what Freddie made, and he called it spinach hands. Okay, now what this shows is that the short-term holders, which is the soft retail hands, went down to an all-time low. And in fact, what they're saying is the Bitcoin sell-off is historic in magnitude. The only time that we've seen the short-term holders dip this low was February 2018, November 2018 with the bear market capitulation, and then again in March 2020 with the COVID sell-off. So who's selling? Well, the retail hands are selling. They are capitulating. The institutions, as per what Melton said, have $3 trillion in cash. Where's that cash going? Let's just listen to this. Let's listen to who is selling it.
A lot of the buying activity we've seen over the last week is actually coming from newer entrants to the market and the venues where it's happening. As I alluded to, we did see 50 million in outflows from Bitcoin ETPs in the last week alone. That maybe is some institutional capital, but we've seen far more on retail platforms. BINANCE is the primary platform we're watching. Record levels of both inflows and outflows on that platform. Coinbase over the last few quarters has seen consistent outflows on the Bitcoin side. And as alluded to, a lot of this market infrastructure, it's open 24/7, 365, serving tens of millions, if not hundreds of millions of customers who around these volatility spikes are looking to trade. These outages that we saw just further exacerbate order book liquidity. Weekend events also exacerbate that liquidity because trading firms aren't working weekends in most cases. So a lot of this, in my view, is still heavily retail driven. The institutions, by and large, that we work with, that we talk to, they're not making 3-day, 5-day decisions. They're spending time, they're doing the research, and when they're allocating, they're looking to allocate long-term.
Right.
Okay, so now we know it's not the institutions, because the institutions are taking their money and they are buying tokens and they're taking tokens off exchanges. So yesterday, we saw something unbelievable. I've never seen this in the history, in my entire history of crypto. And now we have much better data. So maybe I didn't see it because the data wasn't available. But when the market crashed, $5 billion of USD entered exchanges. Yeah, that's right. $5 billion of USD entered exchanges. I want you guys to look at that graph. So that is the stable coins flowing into exchanges as the crash happened yesterday. What happened 2 hours after that? You guessed it. $5 billion of Bitcoin moved off exchanges. I mean, is that a coincidence? No. It is the institutions waiting on the sidelines for the leveraged hands. And you can see this chart again. Every time that the retail hands let go, they're selling it back to the institutions who are taking this off exchanges. We saw it again yesterday. So to summarize, we had the liquidations yesterday. We had the biggest number of liquidations that we have ever seen. That is the number of liquidations. We had $9 billion of leveraged liquidations happening over 800,000 accounts. Okay, have a look at what happened there. And that what it means, what this actually means, it just means that the retail hands are coming in here. They're taking leverage. They can't have the leverage. And it's like Jim Cramer said, the amount of leverage in crypto by the retail investor is insane. And I guess you aren't supposed to talk about it. That's exactly what happened. Let's look at the live numbers of the leverage liquidations right now, because that was what you saw a few minutes ago. That was a few hours ago. Let's look at it. So in the last hour, 18.52 million. So it has slowed down a little bit, the 24-hour leverage liquidations, but still very, 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 very high in terms of the number of liquidations. This whole thing, this whole correction was caused by overconfidence. Markets going up too quickly, too many liquidations, and now what? Now we have reset. We have reset so badly that what Yan says, he says 70% of Bitcoin short-term holders are now at a loss. Soon the panic sellers will run out, and then the downward pressure will disappear. And if you look at the number of liquidations or the number of leveraged positions on exchanges, Freddie, if you could call up that chart for us of the number of leveraged positions on exchanges. It hasn't been this low. I don't think it's ever been this low. It hasn't been this low at least since 2017. So what does it mean? How do we interpret all of this? Well, we interpret it as follows. There may have been manipulation, and there was this link. I don't know if you guys saw this, and I have tracked it and I have claimed its authenticity. But there was this manipulation link where somebody actually called us and said, you know, hey guys, we're running a bit late, but he says it depends on how many other firms will be liquidated in the process. This will be big, 35,000 limit orders. And this whole market manipulation thread alludes to the fact that this market manipulation was created to liquidate a few of the short-term or the long-term players in Bitcoin. Regardless of this, it doesn't matter. Regardless of whether it was manipulation, regardless of whether it was the Chinese government or the whales, the facts are the facts. The facts are that the retail investors were over-leveraged, and now they're not over-leveraged. So what's happened, because we're not over-leveraged, is this, and I want to show this to you guys. I hope I've got this tweet here. I don't have the tweet. Okay, but the bottom line is the leverage positions are finished. There's been too many liquidations, and now we are back at zero. There are no more leverage positions, or very, very, very few leverage positions. And now, if you're here, you've got to make a decision. And you've got to make a decision as to whether you are here for the money, you're here to make quick money and take leverage and to speculate in this market, or whether you really, really, really have conviction in crypto. Because the problem is that if you're here to make money, it's going to get a lot harder now. You may have been wiped. You may get wiped again. But if you are here with conviction, and when I say conviction, I mean Michael Saylor level of conviction. You know, like when he is so focused and all he thinks about is how Bitcoin is disrupting gold and how Ethereum is creating DeFi, and DeFi is disrupting the banks and creating NFTs and everything else. If that's the case, then you're not here for the price. And the price is a by the way type thing. And then you sound more like people like Mike Yusko. And I want you to hear this.
Yeah, look, the real problem, Sully, and we've talked about this in the past too, is price is a liar, right? The price of an asset is not its value. The value of the asset is determined by the fundamentals, and the fundamentals of Bitcoin, of Ethereum, of cryptocurrency broadly, of blockchain technology broadly, are all increasingly getting better, and they're getting better at an accelerating rate. The price is what two people decide to exchange an asset for. And unfortunately, what happens is we go from investors buying things because they think the price is below the fair value, to traders who buy things when prices move up or down, to speculators who buy things because the price is going up. And unfortunately, in the past year, we have a whole bunch of gamblers who got free money from the government who are buying things, and they're buying on leverage. And what happened in the last couple of days is a whole bunch of levered traders, people who were 20 times, 50 times, in some cases 100 times levered, got margin called. And they need to get flushed out. This is a healthy correction. We need this to get the money back to the investors, and assets flow to their rightful owners. If you're hitting the panic button selling today, think somebody is buying. Yeah. Who's buying?
Assets flow to their rightful owners, and that's exactly what it's about. If you're here because you have conviction in Bitcoin, and you have conviction that Bitcoin is going to disrupt gold, and you've done your research to show you that Bitcoin is more energy efficient than gold and more energy efficient than the banking system, then this doesn't matter to you. This is just a transfer of assets to their rightful owners. If you were buying yesterday, it means you had conviction. If you were selling, you were here for the wrong reasons. And that's how you're supposed to test yourself. The same thing with Ethereum. Either you are here because you believe that Ethereum and DeFi are going to disrupt everything, or not. Now, I don't know if you guys saw this, but yesterday, everything crashed. The centralized exchanges crashed, Binance crashed, CoinGecko crashed, everything crashed. What didn't crash? DeFi didn't crash. Guys, did you see this tweet from Hayden Adams, who is the founder of Uniswap? He says, crazy day in crypto, especially for all the newbies. How did Uniswap perform? No downtime, unlike most of the centralized exchanges. Although fees were high, insane all-time daily volume of $6.3 billion. So we realize that Ethereum is disrupting the centralized system, and it is doing such a great job that it was the only system that didn't actually crash yesterday. Okay, now let's get to the elephant in the room. Gas fees were absolutely high yesterday. Did you guys see the insane fucking gas fees yesterday? I've never seen anything like it. $918 to put through transactions. But in this case, the gas fees were actually a feature. The gas fees were a savior. Why do I say they were a savior? Because most traders actually couldn't cash out of their positions because the gas fees were just too high. So in a way, we could say that the high gas fees in Ethereum were actually a feature. They saved the day yesterday. I spoke to an analyst earlier who did some models that said that if the gas fees on Ethereum were actually low yesterday, we would have had another 20 to 30% drop in the Ethereum-based assets, the Ethereum and the ERC20 assets. So what does that mean? It means that if you're here with conviction because you believe that all these things are going to work, price doesn't matter. Then you become like Raoul Pal. And if you look at things like Raoul Pal looks at things, then you're looking at things like this. And you're saying, well, if you look at the charts and you look at overlay the 2013 chart over the chart today, kind of looks exactly the same. So what are you panicked about? And so now I think that we're going to get into two camps. There are going to be two camps in crypto. And you got to pick a camp, guys. You got to pick a side. Because if you pick the wrong side, you should probably get out because you're just going to burn yourself every single time. There's going to be the believers. Mark Yusko, Raoul Pal, Michael Saylor, me, anyone in that camp who really believe and understand the disruption. And there are going to be the non-believers. Bill Miller says, if I like something at high prices, it's a safe bet. I like it more at low prices. This Bitcoin correction is right in line with the moves we have seen many times in Bitcoin. On the other hand, you have Scott Minard. Now, before we put up this tweet, I want to show you guys. Scott Minard is from Guggenheim. He's the head analyst of Guggenheim. And he went on to Bloomberg, and this is what he said on Bloomberg. This is what this guy says on Bloomberg not so long ago, December.
Of course, we made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Whoa.
So, we're going to, even if we had the ability to do so today, we're going to monitor the market and see how trading goes.
Okay, so this is a guy who heads up Guggenheim. Guggenheim is one of the biggest investment firms in the world, who says that in December, they had a thesis that Bitcoin was going to be $400,000. What does he tweet out yesterday? I mean, crypto has proven to be tulip mania. As prices rise, tulip bulbs and cryptocurrencies multiply until supply swamps demand at previous market clearing prices. There are two camps here, guys. Either you believe or you don't believe. Either you believe that Bitcoin is going to disrupt gold, and then you know that there are going to be some challenges, or you don't. Every technology in the world has had its challenges. Internet had its challenges. How can we order anything if dial-up is so slow? Oh, but then they invented fiber. With Bitcoin, it's exactly the same thing. And that's exactly what Kathy Wood said yesterday. I don't know if you guys heard this clip from Kathy Wood. I want to play this for you. And the question asked to her was, do you believe that Bitcoin can still hit $500,000?
Bitcoin, I mean, you at one point, I think back in April, told Dow Jones that it could go to about $500,000. Do you still hold that target? Do you still think that's where we're headed?
We do. I do. Yassine El-Mandra is our crypto analyst, and we go through soul searching times like this and scrape the models. And yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
So she's basically saying that if you believe in this, you start to create other industries that make the blockchain industry more efficient and more usable. And then you start making money, not only on the blockchain industry, but also on the other components around it. Now, that's someone with conviction. So we're going to break this up now. They're going to be people with conviction who are going to land up making money, and people without conviction who don't make up, who are not going to make money. And we saw this yesterday because there was a very clear divide between the people who have conviction and the people that don't have conviction. Let me show you what I mean. Let's look at things like GERO wallet. Okay, GERO wallet still at 70 cents. This community, the Cardano community, has conviction. Let's look at Cardano. Cardano is 185. A community with conviction, nearly back at all-time highs. Let's look at Cardstarter. Cardstarter is the launchpad for Cardano. The Cardano community has high, $77, almost at all-time high. The Cardano community has high conviction. They are not fazed by little rattles in the market. Another market that has a lot of conviction. Let's have a look here. Matic. Okay. Where is Matic? $2. $2, guys. Matic hasn't, I mean, this is like highs from a week ago. Let's look at QuickSwap, which is again another market with conviction. The AMMs on Matic, over $1,000. It shows that what's happening here is there are two camps here: conviction and no conviction. If you have conviction around blockchain technology, this is the biggest buying opportunity of your life. You should be looking to ladder into tokens right now when they're still on sale. And if not, if you're here for the quick money, then good luck, because we can't help you. You're going to go and you're going to wait for the markets to rise again, and you're going to take more leverage. Now, I promised you guys that I'll show you guys my shopping list for today. And I want to bring Sheldon on the stream here. Sheldon, we've got a few minutes, and I want to show the guys my shopping list for today. Show the guys what I'm buying. Guys, if you want my shopping list, let's actually use this to get some likes and get this video viral. Let's get this video viral, break the algorithm. We've got 6 minutes left, and I want to show you guys my shopping list. But we need to get to 15,000 likes. There are 18,000 of you on the stream. There are 11,000 likes. At 15,000 likes, I'm going to show you my shopping list. It's huge. I've got it down for you. I've got it down right here. I'm going to show you the actual tokens, and I'm actually going to show you the prices as well. I mean, here it is. Did you see it? That's my shopping list. That's what I'm Sheldon, what do you think of my shopping list? Guys, if you want it, 15,000 likes, I release the shopping list. Yeah, I see we're on 12,000. Smash, smash, smash. Let's get the likes up so we can show. I see Rudo, Lee through the window here. Who wants to Lee, hit the like button if you want the shopping list. Otherwise, no shopping list today. Okay, let me know when we got 15,000 likes, buddy. Let me know when we got 15,000 likes. Come on, guys, smash that like button, and then I'm going to reveal my shopping list. Now, the importance of a shopping list is as follows. if you have conviction and you've done your research, this is the best time in the world to pick up the low-cost gems. You know the alts, you know the ones that are almost bulletproof, and then any price movements are just noise and opportunities to pick up and mine this, as Sheldon says, mine the same coins for cheaper. And that's exactly what I want to show you guys. When the market crashes like this, the first thing that I do is I make myself a shopping list. And I say, look, I want to know what tokens to buy. And I've set myself a buy price. And then I either put in the orders or I set alerts to monitor the buy price. Now, in markets like this, where people are talking about such big pullbacks, you can afford to set your buy price way, way, way under the price that we're at today. So, Sheldon, let me know what you think. In fact, do we have enough likes? I mean, can I reveal? I can't reveal the shopping list yet.
Still not.
I'll reveal my hodl list because you all know my hodl portfolio. So I've broken down the shopping list into two parts. The first part is my hodl portfolio. And what I'm saying is, if any of these tokens get anywhere near this price, it's not an order, it's anywhere near this price, this is where I'm looking to accumulate as much as I can. Of course, the price looks pretty low, but you got to set yourself a price, and it doesn't need to be the same price that I've got here. Find a price, find somewhere where you're comfortable. Sheldon, of these ones, what do you think?
Oh, they're all brilliant, man, to be honest. They're all fantastic ones. I can't really...
What do you think of the prices?
Yeah, well, that was absolute bargains. Obviously, we're a little bit higher than that now, but I think we do have good opportunities to be getting them close to those ranges again, definitely. That's insane prices, right? I don't even know what to even say to those prices. You know, if we saw that 2 weeks ago, we would be like, what? Never.
Yesterday, we saw those prices yesterday, and according to you and Gareth, the market may take a pullback. So the idea is that you beef up your hodl portfolio. You buy Bitcoin, Ethereum, DOT, ADA, BNB, and Link. And I'm looking at it anywhere near this. If I see BNB at $300, I'm going to start buying. If I see Cardano at 120, I'm going to start buying. If I see Bitcoin at 36, I'm going to start buying. If I see DOT at $25, I'm going to start buying. These are my target prices. Then there's a whole list of other gems that I've chosen for you guys that we've got 3 minutes to talk about. These are the ones that I'm looking at. And again, these are the target prices. You know that these are not going to fail and they're going to be here forever. And some of them are super close to the buy price, like Matic, $1.50. If it gets anywhere near there, I'm buying like a crazy person. Let's look at Rune, Thorchain, one of the most exciting plays. In fact, one of the most important tokens in the whole ecosystem because it allows for cross-chain protocols, for cross-chain swaps, better than any other cross-chain swap. It's at $14.71. This went down to like $13 yesterday. This is something, it went down to just over $10. If it goes down again, I'm buying Thorchain. Let's look at the other ones that I'm buying. Let me just get them up onto my screen. Luna, if Luna gets anywhere near $8 to $10, I'm buying it like crazy. In fact, I'm actually going to start buying Luna again now because if I look on my screen, Luna is trading at
no, Luna's still at a good price. Yeah, it's $11.
$11. I mean, come on, $11. You got to be buying it. Solana, there's a mistake here. It should be $35. If it's at $35, I'm buying it. Guys, what I'm trying to and take a screenshot of this. If not, it's available on our Instagram. The reason why I'm showing you this is if you don't have a plan, then you plan to fail. And you have to have a plan. And my plan is I've made a shopping list of exactly what I want to buy. I've set alerts. And as soon as these tokens get there, I'm using this opportunity as a once-in-a-lifetime opportunity to make life-changing money. This is one of those opportunities that you're not going to see for a hell of a long time. Sheldon, what do you think, man?
No, I agree with you, buddy. And you know what? There is another, at least a 10% drop coming. Sure, you know, the markets have gone 30% today. There's a small one coming, and that's a good stock up time, definitely.
All right, we'll talk about this a lot tomorrow. Yeah. That's all we have time for today. I mean, we are completely out of time.
I think I'll chart those and we'll go through them also tomorrow on the show. No problem.
Amazing, brother. See you tomorrow morning, my man.
Awesome, buddy.
Guys, thank you very much. You guys are my only friends, my best friends. I hope I've given you guys great value today. Hope I've shown you the psyche of why everything crashed. I'll see you again tomorrow. 2 shows tomorrow. And remember, tomorrow is Friday. What do we do on Fridays? We banter. We'll have a big banter for you tomorrow. We'll confirm who's on banter on my Twitter. So I will see you again tomorrow, 6 a.m. EST and 10 a.m. EST. Until then, trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own